January 2021. The NASDAQ ticker Peloton flashes green, then red. Market cap hits $50 billion. It feels like a movie climax. But the numbers don't lie. The bubble is already thinning. Fast forward to the end of June 2025. Equity is negative 414 million. A single dusty Peloton bike sits in a suburban garage. The hardware remains. The money is gone. John Foley wasn't a fitness guru. He was a book guy, president of Barnes & Noble. He knew how to move physical inventory. Books, shelves, retail logic, not sweat, just paper and profit margins. Then came Tom Cortese, also Barnes & Noble. They sat down at a desk. Cortese pitched an interactive bike. Foley listened. It wasn't about exercise, it was about connection. The calendar flips. 2011. Foley takes the pitch seriously. He sees a gap. People buy books alone. Why not work out alone, together? The idea is simple, expensive, risky. Foley sketches it out. No boardroom, just a napkin and a vision. He pitches the interactive bike concept to Cortese. It's quiet, intimate, the birth of a billion-dollar obsession. January 3rd, 2012. The official date. Peloton Interactive is born in New York City. The team, Foley, Cortese, plus Yoni Feng, Hisao Kushi, and Graham Stanton. 5 people, 1 table, a lot of hope. Validation starts small. Kickstarter 2013. They sell the first bike online. Backers pay up front. It's a promise, a digital handshake between founder and customer. The money comes in. The risk shifts to them. 2 years later. 2014, the first internet-connected stationary bicycle hits the market, tablet included. It's sleek, heavy, not just a bike anymore, a portal. The hardware is finally here. Time moves fast. January 2018, the bike was just the start. Now they unveiled the Tread Plus, a massive treadmill with a giant screen. It's not just cardio anymore, it's a cinema for your living room. The hardware gets heavier, the price tag gets higher. They are betting the house on more square footage. The map expands. May 2018, plans announced for Canada and the United Kingdom. The global ambition is loud. They want your home gym in London too. The subscription model travels with the bike. It's a borderless sweat economy. September 26, 2019, the bell rings. This is the IPO. Peloton becomes a public company on NASDAQ. The ticker symbol is Peloton. John Foley watches from the floor. It's the peak of confidence. The market says, we believe in the sweat. We believe in the subscription. The numbers are staggering. The IPO raised $1.16 billion. That value? $8.1 billion. The stock opens at $29. It feels like immortality. The valuation is built on future subscriptions, not just current sales. November 2019. The culture penetrates deep. The gift that gives back ad drops. It's holiday season. The bike is the ultimate present. They are selling status, a lifestyle you can buy. The ad is slick, it's dark, but the music doesn't come free. March 2019, the National Music Publishers Association sues. They claim copyright infringement. Peloton used songs without licenses. It's a legal friction point. The rhythm is off. December 2019, the backlash hits hard. That gift ad? It's called dystopian, sexist. The internet explodes. Social media screenshots flood in. The stock plummets. Peloton loses $1.5 billion in value overnight. The bet was big. The hangover is bigger. April 2021, the U.S. Consumer Product Safety Commission sends a warning letter. It is not a suggestion. The agency states the Tread Plus poses serious risks to children, specifically small ones. They warn users to stop using the machine immediately. Peloton's legal team does not panic. They argue. The company calls the warning inaccurate and misleading. They insist the Tread Plus is safe when used as directed. It is a standoff. Regulators want safety. Peloton wants to protect the brand narrative. Then, the story changes. A 6-year-old boy dies after being pulled under the treadmill belt. It is a tragedy no business plan accounts for. The period of resistance to the recall ends. In May 2021, Peloton voluntarily recalls the Tread and Tread Plus. The silence breaks. The scale is massive. Peloton recalls more than 2 million exercise bikes in May 2023. This is not a small batch defect. This is systemic. 2 million units. That is a lot of living rooms and a lot of liability. The market reacts instantly. Stock charts plummet. In January 2022, Peloton's market value drops by $2.5 billion. The shares tumble below their IPO price. Investors do not wait for the quarterly report. They sell fast. The valuation of $50 billion from early 2021 evaporates in weeks. The financial damage compounds. In August 2022, Peloton reports a loss of $1.2 billion. This is not just a bad quarter, it is a hemorrhage. Revenue growth stalled. Costs remained high. The sweat economy bubble has a hole in it. Leadership shakes. In September 2022, Chairman John Foley exits his position. It is a management shakeup. The founder who bet everything on high-margin hardware subscriptions is stepping back. The company needs new direction. Old strategies are failing. Enter Barry McCarthy. He is appointed as the new CEO. His background is not in fitness. It is in streaming. McCarthy was a former executive at Netflix and Spotify. He knows subscriptions. He knows churn. The visual is a professional headshot, calm against the storm. The cuts begin. In August 2022, Peloton announces it will cut 800 jobs. The office empties out. Desks are cleared. This is part of a broader restructuring. The company hiked prices and shut stores. They stopped making bikes themselves in July 2022. The decline continues. Peloton stock trades below $29. This is the IPO price from 2019. The company is worth less than it was at launch. Shares slip further. Activist investors call for a sale. The pivot from growth to survival is complete. Barry McCarthy arrives, Netflix veteran, Spotify CFO. He sends an email to the staff. It's his first message as CEO. The subject line is calm, the content is confident. In an email to staff, he claimed Peloton had found product market fit. It's a bold claim for a company bleeding cash, but the internal documents tell a different story. A recording from December, it's labeled Project Fuel. The transcript is awkward. Tim Shanahan mentions the dynamic between Joel Foley and John Foley. It's messy, it's personal, it's not a business strategy. Then comes the apparel pivot. They wanted to sell clothes, not just bikes. A November 2021 slide reveals the truth. Sales of their private label apparel were slower than anticipated. The wallet share was moving toward going out clothes. People left their homes. The plan collapsed. Production stops. Internal documents confirm it. Peloton temporarily halted manufacturing of bikes and treadmills. Why? To optimize costs. Demand had dropped. They couldn't sell what they built. The factory floor goes quiet. McCarthy's cost-cutting plan begins, but the market isn't buying it. The disconnect is total. Leadership sees fit. Reality sees loss. May 2024. The CEO steps down. It's not a promotion, it's an exit. The company just cut 15% of its workforce. The door closes behind him. The strategy is simple. Lower the price. Cut the cost of the bike and the tread. Hope volume saves them. It's a gamble on desperation. Peter Stern arrives later. He replaces McCarthy. The revolving door spins fast. Stern says he wants healthy, sustained top-line growth. That's corporate for, please stop losing money. Then comes the next cut. 11% of the staff laid off. The memo goes out. The office gets quieter. Every cut is a plea for survival. The numbers don't lie. Revenue had $657 million. Wall Street wanted $674 million. They missed the target. Again, the gap widens. They pivot to the used market. But now, you pay a $95 activation fee just to turn on a second-hand bike. You're paying for the privilege of recycling their own inventory. John Foley is gone. The founder left in 2022. He tried to build a luxury brand. The market built a discount bin. The vision is broken. Peter Stern is the CEO now. He sits in an office looking at spreadsheets that no longer lie. The era of the founder is over. The new leadership is quiet. They are not selling dreams anymore. They are counting pennies. The products remain. Stationary bicycles, treadmills. They sit on shelves, waiting. The hardware is still there, sturdy and expensive, but the market has changed. People are looking at the price tag differently. The luxury is gone. The utility remains. The subscription app still works. Fitness classes and subscriptions are the service. You pay to enter the studio. The connection is digital, but the sweat is real. This model survived the crash. It is the core revenue now. The instructors are still in the studio. They lead the classes with energy. The sweat economy taught us something. It showed that people want community. They want to be told what to do. That demand did not disappear. Think back to the kitchen table sketch from years ago. The quiet moment before the noise. John Foley had an idea about connecting fitness. It was simple. It was bold. It built a company that defined a decade of home exercise. A Peloton bike sits in a home gym today. It is a piece of furniture, a status symbol, A reminder of a bet that cost everything. The hardware is still there. The lesson is in the silence after the music stops.